What's going on, everybody? Welcome back to Capitalism Lab. Should be an exciting episode today. I went ahead and actually ran the simulation for about a year off camera, and my reasoning behind that was I wanted to get this operating profit up to around 100 mil a year, and raise enough cash for us to actually make an injection into our bank. We are gonna get it running this episode, guys. So I want to take a look at a few things. The most noticeable, well, we go to this overview. We have 0 deposits now, which is fine. For some reason, we still have 71 million showing here, and this is how much we owe in interest off these deposits. I don't know where this is coming from, but I think this is from our branch. This is not from HQ. Even though for some reason this says 0. Really weird, but oh well. So I think I have a better loan structure, and I think we mentioned this last episode, but 80% of our loans are going to be in AAA and single A credit loans, just because I want the stable income. We're not going to try to compete with our competition right away. We're just going to try to remain or start profitable, because this has been a very, very cash intensive venture that hasn't gone our way. Especially, I mean, yeah, look at Lifetime. We've given up almost $500 million trying to make this work. So here's all I care about. Training, that can be 0. We're not going to worry about that. Our job is not to take market share. Our job is to make this positive, our net interest income. And from my understanding, this is what we owe. And this is still declining because we took new... I don't want to accept deposits. I'm going to resume loans, though. I don't think we'll be able to give out loans until our cash balance is positive, though. So we're going to have to make an injection. And I might actually raise some more funds before I do that, just because I want a cash balance to be positive. This should be our last injection, hopefully. Our stock is shot way up. Oh, one thing, too, before I actually get into the banking venture, I was looking at off camera. I wanted to look at our apartments to see the vacancy rates, because some of our commercial buildings are struggling because, yeah, some of these are flat. And I guess my only move is to probably lower rent even further to make this somewhat attractive. So I'd rather take 70% and make something than nothing. So let's actually start running this again. Sure, but yeah, I just want to look at all our commercial buildings. Actually, how are our regular apartments? All 100%? Yes. Wow, that's impressive. Just our commercial are struggling, and I could have done a better job placing these. So that's on me. But hopefully we see this start to trend upwards and this annual return start to trend upwards. We got a lot of cash tied up in some of these properties. And this is exciting because we're about to hit a really big milestone. An operating profit of around 100 mil annually, which is huge. And I want to see if we have any outstanding bonds. I thought we just issued. It seemed like we just issued. Maybe not. Oh, this is... never mind, this is buying. Okay. Financial actions. That's where we were. Yeah, here it is. Oh, we have 100 mil due in 2039. So it looks like we might... because we used this to expand our real estate, and we got this up to almost 100 any second now. But... so that was well spent, I think. That was well spent. So actually, according to this, we should be able to technically pay this off in a year, based on how much we generate. We have about 8 years left on that. I think I'm going to roll that over. I did not mean to do that, but now we have an additional 10 mil. Whoops. Okay. Whatever. We'll take it. That's not a big deal. So we're going to issue 10 more years from here. And now We have 200 million to work with. This should be enough, especially if we generate 100 mil a year. I'm not going to open anything new. We're just going to let this run. But what I want to do, no new deposits. That's good. Okay, we don't want to open too fast. We're going to make an injection here to hopefully help our balance sheet. I don't know why we're bleeding so much, though. Why are we bleeding so much cash? Is this because of we're just losing, say, 800,000 a month? I assume that's what it is. But we are going to transfer 100. Let's transfer 100. There has to be an easier way to do this. Maybe not. I'm sorry you have to witness this. Yeah, I can't type. Okay. So the point of this transfer is to get make our bank a little more liquid. They have around 15 mil in cash. Now what my question is hopefully we can start to loan out some of that and generate some income. This is at 80. We're gonna bump that back down to 70. Our net interest margins. Why is our net interest margin so bad? Oh, it's probably because we're loaning nothing out, I assume. I mean, we're paying the minimum. So let's have that run and see what happens. I hope this will help. We have about 100 mil to work with too, if we need to deposit more. But anything over this, and I mean, then we're in trouble. So hopefully not. In the meantime, we have about 100 mil sitting here. Let's put that to work. Sony pays a nice dividend. Any major corrections we've seen? Not really. That's too bad. ICBC. Good time. Okay, that's fine. We'll just keep it on hand. We could put it into some bonds that maybe are paying a decent. I don't really want it locked up, though. Capital ratio is still too low. What does our capital ratio have to be again? Uh-oh. Is this still, we're still bleeding so much cash, and I don't know why that is. If anyone knows, let me know. Is it because of just our income statement that we kind of have to draw from this cash balance? Maybe. So I assume it is. But our revenue is basically flat. Our profit's almost zero. We're in the right. We're still headed in the right direction. We just need this ratio to be a little higher so we can start loaning stuff out. If I deposit another, say, 50 mil, what'll happen? When the capital ratio is too low, the game will stop issuing. Okay, let's just do that. Let's have that as a safeguard, and we're gonna make another transfer. It's a pretty big gamble. You know what? We might have to. Now I'm gonna bump this down. I don't want to transfer. I don't feel comfortable transferring 100 mil yet. Let's transfer. Transfer 60. That leaves us with 70 in our cash balance, and it should help our balance sheet. Okay, our capital ratio is 36 and declining. And we are loaning out money now. Good, 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 good. That's promising. I don't know why this is still bleeding, though. And all of a sudden this... Okay, this is going down. Good, good. We like to see that. All right, we're generating around 20 or 2. Yeah. So this is declining, and this is going up. Very nice. Margins of around 2%. It's So our net interest income will flow into here, and it is so far. We're not okay, we're still losing money though. I think that's just because of the scale. The more we scale this, we just need to bump this up now. These are fixed. I would argue most of these are fixed. We have one branch, and I don't know if it actually is accepting deposits. I don't want to accept them too fast. That's the thing. Our revenue is positive for the first time in 3 years, 4 years, 5. I don't even remember the last time this was positive, so that's good news. That's really good. Our gross profits expanding, so this is promising. I like where we're at now, and we're making over 100 mil in operating profit. So thank you to all of those that actually gave me advice on this, because I probably couldn't have done that by myself. But compared to last year, this is good. This is promising. It's about time. Once we break even on this, I'll feel a lot more comfortable injecting more money into the bank. Now it's just a matter of fact on when do we turn this on. Right now it's already too low. Making around 3%. Very nice. This is good to see. Like it. Gross margins of around 63%. Current loan to asset ratio of around 70. Cool. Good. I think we let this run. Maybe I inject more cash. I'll try to build up my cash balance though. Let's check the market if there's any real estate opportunities just really quickly, because it never hurts to build more cash flows. They really like that. Actually, maybe not. Well, our investors haven't really reacted. We're only trading at a PE of 14. It's pretty cheap for an emerging bank. It's and one thing to keep an eye on too is if we ever go into some sort of recession or contraction of our economy, then I don't know how our bank is going to react. I think we're in mostly conservative loans, so I'm hoping that we'll be able to weather the storm a little better than some of our competitors. But who knows? Let's take a look at these indices. Are there any cities that we can see? Okay. All of these have surplus supply, which is fine. It was just something that was not much we could do there. Okay. That's fine. Let's take a look at we could afford to lower rent even further if we're in a competitive position to do so. Let's see. All these are maxed. Nothing more we can do here. Great. Adding around 7%, 8%, 11% on some of these properties. 37%. I mean, these are fairly new, but okay. Commercial buildings, 91, 91, 85, 88. Better. Yeah, that is better. Let's see if we can just improve these margins just a little bit. This is in Craig. We'll lower it to 60. 60. I mean, they're paying. That's a pretty good steal. City of Craig. So we'll let that ride. What else? There was one other building we just missed with this one. Yeah, here it is. TV Heights. Oh, this is still at 85. Okay, we got plenty. Let's move this down to 70. See where that takes us. Good. Good. And if that negatively impacts us, we can always adjust it back. But for now, I think that's adjusting to the market accordingly, especially with a surplus of housing available. And that's the market sometimes. That's what happens. Let's go back to Craig. This is exciting. We're finally getting to the point where we can think about scaling. For some reason, this is falling. Why? What is going on? Vault's going up? Kind of. Uh-oh. We're loaning less and less. I don't want to stop. Stop approving new loans. Let's start accepting deposits, but slowly. And what happens to our... Our margins are shrinking again. Okay. Never mind. Stop this for a minute. And we don't have enough to loan, I believe. Yeah, our revenue started to... why is that? Well, we have positive equity for the first time in a... Our deposits shrinking? Let's make another injection. Yeah, capital ratio is 0.3. Okay. Transfer another 60 and see what that does. Very capital intensive. You're learning. And I mean, this just shrinks automatically. That's what I don't get. Our deposits are still going down. We start to take on more. Although I'm not sure what that exactly does for us. And we can just out, but see, our margins are back to 4% again. Like it's just, how long does this cash last? Still an expansion, nothing there. Our cash is hovering around 34. Income statement, how's it looking? Still losing money? Okay. If I get rid of this first branch, what happens? Yeah, this is doing nothing. Not even. We get rid of this? Hate to sell the land. Okay, close that. That should help cut costs. Right off the bat, right? That has to do good things. So once the month of August is over, we should see an operating profit or something closer to what we're seeing now. I closed the first branch just to try to get rid of some of this overhead. And it didn't look like we were accepting any deposit. We weren't making any money there, that's for sure. So it can't hurt us. I just want to be flat because my main problem is how fast we're bleeding through this cash. That's my only concern. And look, our capital ratio is already down to 77%. And we stop loaning at 70. Maybe I'm mistaken. Well, current loan to assets around 70 exactly. Our margins are good though, 5%. Not bad. No one's depositing money here. Or did we take off deposits? Okay, the month of August was done a while. Yeah, we're almost flat now, which should help. This should stop going down. Should hover around 33. If it falls below 30, then I'm in trouble because I don't know how to keep a solvent otherwise. That's my only concern. I'm just kind of monitoring this right now. Still negative. Making pushes right direction. If I start, well, let's see here. It says we're accepting. Are we gonna see this go up? We don't. We don't have any. We have a lot of interest income. No deposit expense. Interesting. So this looks like it's free money. Minus the, well, losses. Yeah, so minus the default. So we're making around 5 mil. And then that carries over into here, yeah? I just don't know why this is 0. Hmm. Okay, either way, we are about flat, which is exciting news for us. We just want to see this continue to trend upwards. And we either do that, from my understanding, seem to fluctuate. Deposits are continuously declining. Not sure why. They're already at 0. If I pay a higher rate, will they stay? Actually. Hmm. I don't know if these are just leftover then. We have a lot of money, so let's actually. I know that was kind of a bad move. Let's open up that first. No, actually, no. Let's deposit another 50. Our bank capital ratio is 80. Actually, we don't even need to deposit anything. I don't understand why we're not taking in any deposits. What happens if I do boost this up? They change anything? Okay. Next challenge, why are we not taking in deposits? I could be missing something very easily. Cash balance is still healthy. Good. See our deposits trending. I want them to at least be flat. Still losing money off overhead. Barely. So, okay. You know what? We have the cash balance. There's another injection. And our existing loans start to increase along with our interest income. Makes sense. Loans to asset ratio. Okay, the higher this is, the more we loan out, which makes sense now. I get that. Now we have around 50 mil in cash with about 113 mil of loan. Sense. We set that at about 70%. I just don't get why our deposits are. Why is this? Well, we're profitable. There's that much. So yeah, I mean, I don't understand why we're actually losing money on this, or not losing money. Sorry, just not taking in deposits. I don't know if we need a branch open for that to happen. I could probably mess around with that, but I think we are off to a good start. If any of you know, and I'm just missing something, please feel free to let me know. But I think we're doing a good job of finally scaling appropriately. We've recovered back from years of lost money. We're profitable for now. We're over 100 mil in operating profit per year, and we have around 133 mil in cash. So we have all of the tools we need to succeed with this bank. It's just a matter of figuring out where to deploy all these resources efficiently. And that's the challenge. It's going to take, I think, a lot of experimenting. And I'm sorry, that's something that might bore you a little bit, but it has to be done. And I think it's a learning experience. Again, like a lot of things, series. But next episode, we should get this figured out. I hope you all enjoyed, and I'll